Okay, here's something that really made me do a double take recently. PDD Holdings, the parent company of Pinduoduo and Temu, it actually surpassed Alibaba in market value in 2023.
Yeah.
I mean, Alibaba, the giant.
It's a big shift, a really big shift.
So what's going on there? What does this actually mean for how we shop online now and, down the road?
That's exactly what we're digging into today. We've pulled together insights from quite a few places to really understand this power shift in China's e-commerce world.
Oh.
We're looking at reports from Jing Daily, Gmean Global for the sort of core news. Then there's strategic analysis from Una and ECDB, investment takes from Freedom 24 and Tip Ranks, a look at sustainability from Sustainalytics.
Right.
Visology gave us a breakdown of Pinduoduo's actual operations, and, well, we even looked at Reddit discussions to see what investors are thinking.
Got it. So a real mix.
Yeah, trying to get a full picture.
So our goal for you listening is to really unpack, what's behind PDD Holdings' crazy fast growth
Right.
and how the big players like Alibaba and JD.com are fighting back.
And what it all could mean for, well, global e-commerce, really.
We want to give you the key takeaways, the important stuff, without drowning you in, endless details. Okay.
That's good.
All right, let's jump right in. The sheer speed, the scale of PDD's rise, it's kind of staggering.
It absolutely is. That 2023 market cap flip, it wasn't just a small change. It was major.
Right.
Look at the stock prices. Alibaba's was what, around $80, like a third of its peak in 2020?
Wow.
But Pinduoduo hit $144. That's actually higher than its 2020 peak.
That's incredible. And JD.com.
They took a big hit, too. Their stock dropped to nearly 50% in 2023.
Oof. So stark differences there. And it wasn't just market value, right? The revenue growth tells a similar story.
Exactly the same story, pretty much. First half of 2023, JD.com, revenue up maybe 4.7%. Alibaba, decent, 8% growth.
Okay.
Pinduoduo, 63%.
63.
Yeah. 63%. And this was when overall online retail in China was growing at like 13%, and physical goods online around 11%.
Yeah.
So Pinduoduo was just on another level.
But here's the thing, right? It wasn't like they came out of absolutely nowhere. They'd been building this user base for a while before that big valuation jump.
That's totally correct.
Yeah.
By 2019, maybe 2020, Pinduoduo had already become the platform with the most users in China.
More than JD and Taobao.
Yep, more users than both. And it wasn't luck. It was strategy. They specifically targeted a group that, well, the big guys hadn't really focused on as much.
And who was that? The sort of overlooked group?
Primarily people with low to middle incomes, living in what they call third to sixth tier cities in China. Think maybe 3,000 to 5,000 yuan a month. It's a huge market segment, actually. And Pinduoduo built their whole model around appealing to them.
Which gets us to their big innovation, right? The team purchase thing. How does that actually work? Why was it so effective?
Okay, so the core idea is social shopping. They connect manufacturers straight to consumers, cut out the middleman.
Right.
But the really clever part is the buying incentive. They push users to form shopping teams with friends, family.
Ah, okay.
The more people join a team for the same item, the cheaper it gets for everyone. It taps into that social connection thing and the feeling of getting a deal together. It almost gamifies shopping.
And drives viral growth, I bet.
Exactly. It's built-in viral marketing.
So they're leveraging social networks, basically. But how do they make money if prices are so low? It can't just be tiny commissions, can it?
No, you're right. Their main moneymakers are online marketing services and transaction services.
Okay.
So merchants pay Pinduoduo for better visibility. Think priority listings, ads on the platform, that's a big chunk.
Like promoted listings.
Precisely. And then they also take a small commission on the sales made through the platform. So it's kind of a dual approach, some from the sale itself, but a lot from merchants paying to get noticed.
Gotcha. That makes sense. It's clearly been a winning formula. So Pinduoduo finds this magic touch. How did the old guard, Alibaba and JD.com, react? They couldn't just ignore this.
Definitely not. In 2023, we saw both of them make really significant shifts, almost like mirror images of each other in response.
Oh, interesting. How so?
Well, both companies, and this involved their founders getting involved again, Lu Qingdong at JD, Jack Ma sort of behind the scenes at Alibaba, they both realized they had to compete on price.
Right.
So JD.com really doubled down on a low-price strategy. Alibaba started talking about a return to Taobao, which also meant essentially getting more price competitive. They even shuffled leadership to focus on it.
It sounds like they see it as a real fight for survival almost. Didn't someone call it a zero-sum game?
Yes, that was reportedly Liu Qingdong from JD.com.
Yeah.
His view was basically that e-commerce had become zero-sum. Any market share they lost, someone like Pinduoduo gained.
Wow.
And his stated goal for JD's changes was pretty blunt. Give users no reason to go to Pinduoduo.
That's aggressive.
Very. It set the stage for this low-price tripartite battle.
And how did that battle play out? What moves did they make?
Well, JD.com launched things like 9.9 bargain shopping,
Yeah.
basically trying to get those super value-focused shoppers, the kind who might buy from street markets, onto JD.com,
Okay.
directly taking on Pinduoduo's turf.
Okay.
Meanwhile, Pinduoduo didn't just sit back. Their famous billion subsidy campaign, which was already about deep discounts, started expanding. They began subsidizing big brands, even in electronics 3C digital products.
So moving into JD and Alibaba's traditional territory.
Exactly. The lines started blurring.
So Singles Day 2023 must have been a huge test for these strategies, that big shopping festival.
It absolutely was. Everyone was watching. And interestingly, surveys beforehand showed consumers were being pretty cautious.
Really? How so?
Over 77% said they planned to either spend less or the same as the previous year. And nearly half said they were specifically looking for lower price stuff or cheaper platforms.
So lowest price across the entire network became the mantra.
That was the battleground, yes.
But did this laser focus on low prices actually lead to huge sales numbers during the festival?
Well, here's where it gets a bit counterintuitive. Overall, gross merchandise volume GMV across all platforms grew only about 2% during Singles Day 2023.
Only 2%. That seems low for Singles Day.
It is quite modest.
Yeah.
And even more telling, if you looked at the combined GMV for just Alibaba, JD, and Pinduoduo, it actually decreased by 1%.
Wow. So the price war didn't necessarily grow the whole pie?
Seems not. Even live streaming e-commerce, which had been booming, saw much slower growth than before.
Okay, so Singles Day was maybe a bit underwhelming for the big guys despite the price focus. What about their financial reports after that period? Did they show the impact?
They really did. And they showed those diverging paths again. JD.com reported just 1.7% revenue growth, their core retail e-commerce, up only 0.1%.
Ouch.
Alibaba did better, 8% revenue growth overall. Taobao itself grew 4%. But Pinduoduo, their revenue surged 93.9%.
93.9.
Yes, an incredible number. And this report came out just before PDD Holdings officially overtook Alibaba in market cap.
That just hammers home how effective Pinduoduo's strategy was. It sounds like JD, at least, kind of admitted internally they were struggling to match Pinduoduo's prices.
That seems to be the case. There were reports, like from a sales manager at a JD self-operated brand, saying that even with internal pushes, getting brands to offer promotions, trying to cut supply costs, they just couldn't consistently beat Pinduoduo on price.
Suggests a fundamental cost difference somewhere.
Likely in their operating models, yeah.
And looking forward, are JD and Alibaba basically like hunkering down for a longer price war in 2024?
That's definitely the signal. Both JD and Taobao made organizational changes late in 2023, trying to get teams aligned specifically for this sustained low-price fight.
Right.
And Pinduoduo, they said they'll keep investing heavily to defend and grow their share. So yeah, expect the intense price competition to continue.
Okay, let's shift gears a bit. Pinduoduo isn't just staying in China, right? Temu, that's their global play.
Absolutely. Temu's been making a lot of noise globally with some really aggressive marketing.
You see their ads everywhere.
Exactly. They've launched in tons of countries.
Yeah.
But long-term success abroad is going to depend on how well they adapt locally.
Adapt in what ways? What do they need to do differently outside China?
Well, a big one is getting local merchants on board. Right now, they rely heavily on Chinese suppliers.
Ah.
Bringing in local sellers is key to, offering products people actually want in each market, cutting down those long delivery times we sometimes hear about, and just generally improving the user experience. Local sellers know the local tastes.
Makes sense. So if Temu can't quite nail that balance, low prices but also decent quality, reasonable shipping, could they run into trouble?
There's definitely a risk. Some people compare it to the platform Wish. If Temu can't deliver acceptable quality consistently and fix things like delivery speed and customer service, they could struggle.
Right.
You can get users initially with splashy ads and low prices, but
Yeah.
keeping them requires satisfaction, repeat business.
So looking ahead then, what are the main strategies for these companies going forward? PDD Holdings first. What's their focus? Now they have this huge user base.
For PDD, it seems the focus is shifting from just acquiring users to getting those users more engaged and spending more, increasing their wallet share.
How do they do that?
Better services, smarter product recommendations, using all that data they have and making their supply chain even tighter. They also announced this 10 billion yuan fund.
Oh, yeah.
Yeah, to basically subsidize high-quality merchants, lower fees for them, suggest they want to attract more brands, maybe higher-value items, onto the platform.
Interesting. Broaden their appeal. And Alibaba, what's their play? Sounds like trying to win back minds with price and service.
That seems to be it, and there are some early signs it might be working, at least partially. Recent reports show their GMV growth improving. Double-digit growth in online orders, high single digits for overall GMV.
So some positive signs there.
Yeah, suggests their efforts are starting to gain some traction.
Okay, let's talk investment angles. What are analysts saying about PDD Holdings' stack now? Do they think this growth can last?
Well, the consensus among analysts is currently a moderate buy. The average price target is around $144.24 based on recent reports.
So potential upside from where it is.
On average, yes. But, and this is important, there's a pretty wide range in those targets. Some analysts have it as low as $93, others as high as $170.
Wow, big difference.
It shows there isn't total agreement on the future path, The ratings are a mix of buy and hold. Investors often look at things like the forward PE ratio here, price, relative to expected earnings when making these calls.
That range definitely highlights the uncertainty. What about ESG, sustainability? How does PDD stack up there?
Sustainalytics gives PDD Holdings a medium risk rating for ESG, environmental, social governance.
Okay, medium risk. Not terrible, not great.
Sort of, but the key part is Sustainalytics rates their management of those risks as weak.
Ah, so they see risks, but don't think the company's doing enough about them.
That's the implication. Especially given PDD operates in over 80 countries with a complex global network for sourcing, logistics. The risks could be anything from labor practices in the supply chain to environmental impact, data privacy.
Something to watch. And what about regular investors? Like on Reddit, what's the chatter comparing PDD and Alibaba?
Oh, there's definitely a lot of debate on places like the Jababa subreddit. People see PDD's lower forward PE ratio, its amazing growth numbers.
Right, the momentum.
Yeah. But then others point to Alibaba being much more diversified, cloud computing, fintech, plus they have way more cash.
True.
So there are real questions about whether PDD's growth is sustainable, especially with Temu facing global challenges. Some folks worry if the model is viable long-term, maybe like some of those ultra-fast fashion companies that faced issues.
Interesting debate. Okay, let's just quickly revisit Pinduoduo's basic model one last time. What are those absolute core pieces?
Sure. So Pathology's breakdown highlights how much they rely on WeChat's social aspect. Their key activities are software engineering, constantly tweaking the platform, plus sales, marketing, logistics, customer support.
Standard stuff, mostly.
Well, yes, but their key resources are that huge amount of user data they collect and the platform model itself connecting buyers and sellers. Costs are what you expect: salaries, platform tech, support, logistics, cloud computing, and tons of advertising.
And the team purchase is central to the customer relationship.
Absolutely. It builds community, drives recommendations, and delivers that core value. Cheaper deals through group buying.
Okay, so let's try and wrap this up for you, the listener.
Yeah, the big picture here is that PDD Holdings really shook things up with its social commerce model. It's forced giants like Alibaba and JD.com into this intense price war.
Right, a major disruption.
And while Temu's push globally is ambitious, it's got some serious hurdles to overcome, especially around localization and customer experience.
Hopefully, you've now got a much clearer sense of these big shifts happening in China's e-commerce world and what might be driving the future of online retail without needing to read, 10 different reports.
Which leaves us with a final thought for you to ponder. Given this fierce competition and how shoppers' habits keep changing, can PDD Holdings keep up this incredible growth?
Or will Alibaba and JD manage to successfully fight back and regain ground?
And maybe more importantly for everyone listening, what does this massive battle ultimately mean for the prices we all pay online and the kind of shopping experiences we get wherever we are in the world?
Something to think about.